Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF conference. And I'm here with Ed Kerschner, Chief Portfolio Strategist at Columbia Threadneedle. Great seeing you, Ed.
Good to see you again.
Exciting times, a lot going on in the market, a lot going on in the world. How is the current administration affecting some of the ETFs that you folks are focused on?
A lot of our focus, as you know, is on emerging markets, and there's a fear out there that Trump is going to start trade wars, and that's the end of the emerging markets. But if you look at the numbers, people are shocked. Only 16% of emerging market exports actually go to the United States. 40% of emerging market exports are with each other. I mean, emerging markets have grown a lot bigger, but trade's a two-way street, right?
Yeah.
46% of US exports go to the emerging markets.
So almost half of the exports that go outside of the US go to emerging market countries?
Yes, but 1 in 6 from emerging markets go to the US. So if we were to really start a trade war, proverbially it's cutting off your nose to spite your face. I don't know it gets through Congress.
Yeah, well, and we're also seeing currency fluctuations, right? So dollar continues to go up, those local currencies in emerging markets go down. Same thing, we have to be concerned about that, correct?
Yeah, strong dollar, obviously punitive to the US economy, gives a competitive advantage to exporting, obviously, from emerging markets.
Yeah, exactly, because you can buy things cheaper. Right.
Simple math.
Yeah. Okay, so let's talk about emerging markets because we haven't spent a lot of time because a lot of focus has been on the US. Advisors know they need to have a certain allocation to emerging markets. You folks design your strategies on emerging markets quite differently. Let's talk about that.
Well, the temptation is I'll just go by the emerging markets, which is a benchmark of sort of what's happened because it's market weighted.
Yeah.
But if you talk to wealth advisors or investors, you say, why are you in the emerging markets? They go, well, it's 3 billion new consumers. Everyone sort of gets that, and that they don't align their investment with their intent. What I mean, if you buy the benchmark, you're going between 15 and 20% consumer, getting energy and industrial and basic industry, getting a lot of other stuff, but you're not getting a consumer focus. So if you want to invest in emerging markets because it's the fastest growing economy in the world, and it's growing because largely going forward of this new consumer economy, then focus on stocks that are in the emerging markets that sell to the consumer sector.
Right. So it's all about exporting, who's buying what, and focusing in on that because that's really where all the growth is, right?
I think it's going to be less and less about exporting. As economies mature, they become consumer economies. As you know, the US economy is about 68% consumption. Yeah. Typical advanced economies, 60% consumption. Emerging markets are only about 50% consumption. But as they mature, they become more of a consumer economy. So not only do you, if you focus on the investment in the consumer sector, you get the growth of the economy, but you get more rapid growth because the consumer sector is taking more of those rapidly growing economies.
So consumers will tell you where the growth is and where it's going to be.
Consumers are where the growth is in the emerging markets.
Excellent. Well, Ed, thanks for stopping by.
My pleasure.
Good seeing you.